Hello and welcome to MasterChartsTrading.com market recap for the week ending Friday, April 3rd, 2015. Today on Good Friday, the futures for E-mini 500, S&P 500 closed at March 11th low. So this could be a ominous news on the heels of the pretty weak jobs report. We'll also look at biotech that is right now at support but could correct by as much as 10+% if the support gives. The China stocks continue to rally, one of the market leaders, as is TLT, the Treasury Bond Fund, still among market leaders as well. The gold extended its bear market rally, while oil is sort of indecisive but is bearish long term, as is natural gas, which is bearish, and it breaks. And today, a few days ago, it broke down from a pennant consolidation and is possibly headed lower. We'll see. All information in this video and MasterChartsTrading.com is for educational and entertainment purposes only and shouldn't be construed as a recommendation to buy, sell, or sell short any of the said securities. All right. So let's look at the S&P 500 large cap index. First of all, long term, the S&P 500 is bullish. How do I know it? If I look at the 50-day exponential moving average, it is above the 200-day exponential moving average, and prices are moving from the lower left to the upper right. Now, so today, Friday, was a very brief E-mini S&P 500 session following the jobs report, which was really quite disappointing in many people's views, and so did the market participants think as well, and it settled at 2039.75. And you can see that the mid-March low here was at 2039.69, so it's just right at the support again. If Monday we open, we're probably going to gap down lower, and if we open and continue lower and close below 2039, most likely this will trigger a pretty strong sell-off, and likely the prices will drop at least to 200 EMA, possibly lower. Long term, of course, I don't see any divergences between the S&P 500 itself and its advanced decline line. You can see that S&P 500 and the advanced decline line are making higher highs, and there is no divergence between it and the S&P 500. As far as the breadth momentum, it remains negative, and if we gap down, it will probably get even more negative. All right, but you can see that new highs, new lows indicator is still positive. So that's one of the more reliable indicators. You can see here it became negative, and then we had a pretty substantial sell-off as well. But it hasn't happened yet on the S&P 500. Next, let's look at QQQ, the Nasdaq 100 Powershares Trust. This one is a little bit different than the S&P 500. First of all, you can see this SCTR, which is Stock Charts Technical Rank for QQQ, which SCTR measures how strong is this security against other ETFs, exchange traded funds, that are not leveraged and non-inverse. And you can see that it is right now at 63.6, and this is actually the lowest reading that is going back to October. So we see some pretty good weakness in QQQ, which is normally a market leader. So similar picture here. If we gap down on Monday, QQQ will most likely follow, and this support is even closer for the QQQ than for S&P 500. So if we break the support, most likely next target would be around $101 right here. Similar picture as far as the breadth, advanced decline line is confirming the higher highs, and there is no divergence that I'm aware of that I see. Similar picture, breadth momentum is pointing lower, and you can see that the new highs, new lows indicator is already negative for the QQQ. So this one is a little bit weaker than the S&P 500. As far as the S&P 500 market timing rules that we use here at MasterChartsTrading.com, you can see that wherever this blue line crosses below this green dotted line, that's a sell signal for me, right there and right there. It has happened already, rather, on the 26th of March, but I decided to keep this position open because this is just a very resilient bull market, and I figured that we might see a rebound to new highs. It actually didn't happen, so I see that it again right here, my trigger was already hit again, and this is a preliminary sell signal. If we gap down on Monday, definitely a sell signal. Another fund that I wanted to show is the Biotech Ishares. This fund has an incredible run, over 50% since October low. You can see that it already corrected, let me see, around 9.6 and 10% from its high in mid-March. And a very similar picture. If we break the support, most likely a correction target would be the 200-day EMA, and I also put in this Fibonacci retracement lines right here, and it's normal for a security to correct, to the 50 to 60% retracement. So this is a good target area for a correction should this support break. Hasn't happened yet. As far as the market timing is concerned, the buy signal happened on October 20th for us, and the sell signal has not yet occurred. There was still no sell signal. But if we gap down Monday, most likely there will be a sell signal, or if we see any more downside next week. One interesting security I wanted to highlight is ASHR, which is a China 300 fund, tracks Chinese shares. So it's just been on a tear as well. You can see the SCTR, the stock chart technical rank for this fund, is way above 90 and consistently above 90. So it's definitely one of the market leaders. And then as far as the market timing, you can see that for ASHR, there was a very good signal on the 28th of October right there, a decent signal right here on the 11th of February, and also a very good signal right here on March 11th as well. And if the SHR corrects, something like this, I will be looking for an entry opportunity on the long side, because this is a bullish security, and to me it makes more sense to buy the dips in a bullish security than to try to time the top. It's really difficult because if you were up here, maybe you thought this was a top, and then it kind of corrected and continued higher, and then up here you thought, oh, maybe this is a top, and then corrected a little bit sideways, and then it just popped right up. So in a bull market, it's very difficult to find the top. So I don't try to do that. And a similar picture for TLT, 20-year plus Treasury Fund, also one of the market leaders. And this is not just against the bond funds, it's against all bonds and stock funds as well. So it's definitely up there as well. And it sold off a little bit on Thursday, but I think that if reaction to Friday's jobs report, as seen in the futures for S&P 500, is any indicator, likely Monday we will continue higher for TLT, and we may actually challenge these highs as well. Not necessarily Monday, but sometime in the not too distant future. This is a bullish security, therefore I am buying the dips. I'm not trying to time the tops. similar thing. Maybe here's the top, or maybe this is the top. Maybe this is the top, or this is the top. So it's difficult to tell. So I always, if it's a bullish security, I buy the dips, and if it's a bearish security, I short the rallies. It makes more sense to me. As far as the market timing, similar picture. One signal did not work out here. You can see there was a buy signal, but it broke down and gapped below support. But then next day it actually, and 2 days later it rallied and there was a signal, and we re-entered the market right there on the March 11th. We're up about, let me see, around 3.5% or so. Okay, next on the agenda is gold. First of all, gold is a end of day chart. Gold is a bearish security. You can see that the 50-day EMA is below the 200-day EMA. So, and this is one of the ways you can tell if the security is bearish. There are other ways you can tell if security is bullish or bearish. But this is actually quite easy and very, obvious. So within this bear market, there was a rally, a rebound that started in mid-March. And this rally is pretty powerful, it's pretty strong. It cleared the first resistance, right here, there was a first resistance, and then it closed above the 50-day EMA, failed, but then found support here and rebounded, and it closed above the 50 EMA for 2 days in a row, on Wednesday and Thursday. So if you're a gold bull, this is obviously a welcome sign. So it's possible that we see maybe a double bottom. I don't know. It's possible. Once again, I'm not trying to time the bottom in a bear market. It's very difficult to do. So to me, since this is still a bearish security, I will look for an opportunity to re-enter on the short side. And so far, I don't even have a cover the short signal. See right there, from this entry right here, there was a cover the short, and then from this entry, there was this cover the short signal. But from this entry, from 27th of January, not even a cover the short signal. So once there's a cover the short signal, I will look for a re-entry opportunity. Has not happened yet. Okay, next is a GDX, Market Vectors Gold Miners ETF, and it is much more volatile than gold itself, and you can see that if here in late March gold miners came up to resistance and just collapsed from there. You can see gold kind of came up but just dropped a little bit. Gold miners really overreact to everything. So it looks like gold miners found support in the $18 area and rebounded. So that's a first good step, first positive step. And I think that if the gold itself continues to hold support and rebound, gold miners will surely follow higher as well. Once again, I'm not trying to time the bottom, so I'm not playing this on the upside. I'm looking for a re-entry opportunity on the short side. And here, around this area, it was just a great shorting opportunity, and so around here as well. I also wanted to point out, call your attention to a bearish divergence. So you can see that gold miners have been making higher lows, but the underlying advanced decline lines have been making lower lows. You can see here. In fact, it made just recently it made the lower lows on both of these, and this is quite bearish. If we don't see a strong breakout here, we will. This just furthers my bearish case basically. Similar to bullish percent index, it's in a bear territory, 26%. If bulls right here, I was wondering, oh, maybe at 50%. It was pretty, encouraging to see it here at 50%, but you can see it rolled over and fell. And as far as the new highs, new lows, you can see that it's pretty much always negative. Just for a few short days there was a positive, several new highs recorded, but then just collapsed back down. So once again, I will be looking for a re-entry on the short side, and similar picture, but once again it's more volatile, so there are more signals here and more false signals as well. Like this signal would have been a false signal because it rebounded, but this was a good signal here in January and a very good signal right here in March as well. And once again, no cover the short signal just yet. Next, we'll look at West Texas Intermediate crude oil, just kind of bouncing here in the $40–50 area, just going back and forth. Here I thought that the support was broken, but the next day it rebounded higher. So I'm guessing that there is some pretty decent support here in the $42, $44, $43 area. Looks like we held it for 3 times and rebounded. But you know, this is a bearish security once again. You can see the 50-day EMA is below 200-day EMA, so my bias is on the short side. And if you look closely, right here is a 50-day EMA, so oil came up to it, tested it, failed. Came up to it, tested it, failed. Closed above it, and then failed miserably. And so far, the past 2 sessions has not been able to close above the 50-day EMA. And then as far as market timing, it was a decent signal on short side February 10th right here, and still no cover the short signal yet. Next, I wanted to quickly show natural gas. Natural gas, also bearish security, you can see. I think you're kind of getting the drift here. Bearish security within it, I can see that this was sort of like a pennant or a triangle, maybe a consolidation, and right there in a few sessions ago there was a breakdown from that triangle, and it continued lower and then touched the support, then rebounded strongly. So it was a pretty sizable rebound, 3+%. But then again, gas does this. Look at the size of those sticks. That's, you know, sometimes they go pretty strong rebounds. Generally speaking, this is still a bearish security, and any rebound, especially maybe if it takes it to maybe $3 right here, it would be for me a shorting opportunity again. Okay, wanted to show you quickly how to find us on the internet. So here at MasterChartsTrading.com we have a blog section and also video section that I will post this video there as well. On the public chart page, you can see we have several links here. Some of them link to this public charts page, where you can find most of the charts that you see in this video. If you have any questions or have something constructive to say, please visit us on one of our or all of our social networking sites: Twitter, Facebook, YouTube, and StackTwits. And also, we will be starting a trade alert service very shortly, so please do sign up for our mailing list, as we will be sending out a special promotion for those on the list to get a discounted price for one of our upcoming trading services. All right, thanks for listening, and have another great trading week. Bye-bye.